I founded Hutchison Road Partners as a foundation upon which I can build my dream, which is to start a hedge fund. I've been investing actively for about 30 years now, and I've seen a lot over those 30 years. A lot in terms of movements of the market, and a lot in terms of analyzing and looking into and making decisions based on looking into the financial statements of public and private companies in my career as a commercial banker. I've worked at an investment bank, I've worked at several commercial banks, I've worked at a consulting firm, I've worked at a major real estate developer. All of those are in the finance discipline, and as you can see, got a lot of gray hair as a result of that. And I think all of that experience gives me a pretty good understanding of the micro and the macro levels of what to look for, and also I think it really makes me a better investor as a result. I'm what you would call a momentum investor, although I don't like buzzwords, but if you're going to use a buzzword to describe the way that I invest, it would be as a momentum player. I like Investors Business Daily. I like the methodology that they use, which is looking at relative price performance in conjunction with volume, increases in volume, that's indicative of institutional buying. A lot of big money coming into that stock. They really nail it. If you look back over the years, they've nailed a lot of stocks, and I really like their methodology as a start. So I start there, and then I do a bunch of more analysis, like value chain analysis. Look at a company, try to figure out how they really make money, and try to figure out if that methodology is going to be sustainable here for the next few years. I'll look at the company's website. There's so much information on a website, from understanding the business to investor presentations, quarterly earnings, 10Q, 10K filings that you can look at. More information than you need really is just on the company's website, so I spend a lot of time there. I'll look at value line to give me some idea of some basic ratios. Even though I'm a momentum investor, I like to feel like I get a good value in what I buy, okay? So I like to look at PE ratio, I look at price to sales ratio, okay? Price to sales maybe being more important than PE. And look at the relative price to sales ratio relative to other companies in their sector, okay? And then having done all that fundamental analysis, then I look to the technicals to actually make the buy decision. And the first rule is I try not to buy into a bad market. So if the market's in a correction, that means no matter if you have a good stock or if you've done good analysis on a stock, you're still probably going to be able to get that stock at a cheaper price at a later date if you're in a bad market. Okay, so don't buy into a bad market. If you have a bullish market condition or even just an okay market condition, then I'll look at certain patterns that IBD and others teach you to look at in terms of when to buy. Okay, I'll look at the technicals. One of the most important things for me is to look at the 50-day moving average. Okay, and it's amazing to me how often the 50-day moving average line forms the support line for the stock. It'll go down, bounce off the 50-day, and that's a good time to buy the stock, okay? Another calculation that I do is to take next year's earnings and then take today's PE ratio and then multiply to figure out if this company makes next year's earnings, what should the price be next year if there's no PE expansion. And if the result there is a 20% total return to the investor, then that might be a good time to buy that stock, okay? Now on the short side, I look at a couple things. One would be in a good market, stock that's underperforming, that's indicative of institutional money going out of that stock and into another sector, okay, or in another stock in that sector. And then secondly, I'll look at what I call an overbought situation, which is maybe a stock that's gone hyperbolic above the 50-day moving average. Those stocks almost inevitably fall back to earth, because there's just a lot of day traders or whatever hot money that's going into that stock. When that hot money leaves, you got a potential for some profits. Now, none of these methods is new, and as you can tell, there's no magic formula. So what I try to do is take these methodologies and maybe do a little bit better job of executing on them than some of the other guys.